Will the US eventually adopt the yuan as a trade currency? While it may seem unlikely, this is the direction the world is moving in. The dollar is gradually losing its dominance, and Chinese exporters are capitalizing on this shift, accumulating $500 billion. This trend could significantly alter the global trade currency landscape, placing the yuan at the forefront. However, will this be enough for China to fully replace the dollar with the yuan? Let's find out. The global economic landscape is undergoing a seismic shift, one that the West is either unable or unwilling to acknowledge. For decades, the US dollar has reigned supreme as the world's reserve currency, bolstered by the economic and military might of the United States. But in 2024, a new challenger has emerged, one that could redefine the rules of global trade and finance, the Chinese yuan. Behind this potential shift lies the BRICS coalition, working to dismantle the long-standing dominance of the US dollar. China's role in this movement is central. In 2024, Chinese exporters gathered an unprecedented $500 billion in trade surplus. While much of the world has been distracted by short-term economic fluctuations, this stockpile represents a ticking time bomb for the US dollar. If China decides to convert this surplus into yuan, the ripple effects could alter the balance of power in global financial markets, threatening the very foundations of the Western economic order. But how did Chinese exporters manage to accumulate an astonishing $500 billion in trade surplus? And why does it matter? The answer lies in China's long-term strategy, which has been years in the making. China, as a key member of BRICS, has steadily been building economic partnerships across the globe, especially with developing nations. While the West has been content to rely on outdated economic models, China has been busy forging new trade relationships that benefit not just itself but its partners as well. For many developing nations, these partnerships have offered an alternative to the exploitative and often hypocritical practices of Western institutions like the IMF and World Bank. This massive trade surplus didn't appear out of thin air. It is the result of China's ability to dominate manufacturing and exports, a position that has only strengthened with the rise of BRICS. For years, China has exported goods in exchange for foreign currencies, primarily the US dollar. But here's where things get interesting. Instead of immediately converting those dollars into yuan, China has been stockpiling them, patiently waiting for the right moment to shift the economic balance of power. And why wouldn't China wait? The US dollar has long been the backbone of international trade, but its dominance is based on an illusion that China is now in a position to shatter. The $500 billion stockpile represents more than just money. It's economic leverage. Leverage that can be used to disrupt global markets in ways the West never anticipated. If China converts that surplus into yuan, the ripple effects will be felt around the world. The value of the yuan would surge, giving China even more economic clout, while the US dollar would face unprecedented challenges. Developing nations, already weary of US economic dominance, would quickly follow suit, preferring to transact in yuan rather than dollars. And that's the key here. China isn't just looking to strengthen its currency, it's looking to offer the world a viable alternative to the dollar. What will the impact be if China decides to convert its $500 billion stockpile into yuan? Here's a reminder to please like and share the video, and subscribe to our channel to watch more videos on Africa's geopolitics, economy, and changing landscape. Let's continue now. The implications are massive. By converting its surplus into yuan, China would be making a clear statement. The time of the US dollar's unchallenged dominance is over. In the immediate aftermath, the yuan would likely surge in value, while the US dollar would face downward pressure. But the broader implications go far beyond a simple currency exchange. For one, China's move would likely inspire other BRICS nations to follow suit. Countries like Russia and South Africa have long been exploring ways to reduce their dependence on the US dollar. A stronger yuan would give them the perfect opportunity to shift away from dollar-based transactions, solidifying BRICS as a real alternative to the Western-dominated financial system. This would be a nightmare scenario for the US, as it would drastically reduce the global demand for dollars, weakening its position in international markets. But that's just the beginning. If developing nations, particularly those in Africa, Latin America, and Southeast Asia, begin to prefer the yuan over the dollar for trade, the effects on the U.S. economy could be devastating. Hyperinflation, skyrocketing prices for daily essentials, and a weakening economy would likely follow. The dollar's value, long propped up by its status as the world's reserve currency, would plummet as demand for it declines. And let's be clear, the U.S. is in no position to handle that kind of economic shock. China's decision to convert its surplus into yuan would also serve as a warning shot to the West. For too long, Western nations have operated under the assumption that the world will always need the dollar. But that assumption is no longer valid. The world is changing, and BRICS is leading the charge. And is the US dollar prepared for a direct challenge from the yuan, or is its global dominance in jeopardy? The US dollar has long been seen as the backbone of the global economy, but that perception is increasingly out of touch with reality. For decades, the dollar has benefited from its status as the world's reserve currency, a position that allowed the US to exert enormous influence over global trade and finance. But the cracks in this system are starting to show. Take the DXY index, for example, which measures the dollar's value relative to a basket of other currencies. Recently, the index dropped to 100.80, a sign that the dollar's strength is waning. While the dollar briefly recovered, hovering just above 101, the fact remains that the global appetite for dollars is shrinking. And why wouldn't it be? BRICS nations, led by China, are offering an alternative, one that doesn't come with the political and economic strings attached to the US dollar. But the real issue is deeper than just numbers on an index. The US has relied on the dollar's dominance to maintain its global influence for too long. As BRICS rises, the US is finding that it can no longer rely on old tactics, sanctions, trade restrictions, and military intervention to preserve its economic power. The world is shifting, and the dollar is increasingly seen as a relic of a bygone era. Can the US dollar survive a challenge from the yuan? Perhaps in the short term, but in the long run, it's looking more and more like the US is on borrowed time. The BRICS coalition has already shown that it's not afraid to challenge the status quo, and as more nations align themselves with China's vision of a multipolar world, the dollar's dominance will continue to erode. And if the yuan replaces the dollar as the dominant global currency, how will the world change? A yuan-dominated world would be drastically different from the current US-centric global order. First and foremost, it would mean the end of the West's monopoly on global trade. The BRICS nations, led by China, would become the new economic powerhouses, setting the rules for international transactions and trade agreements. And with this shift would come a new balance of power, one where developing nations no longer have to bow to the economic dictates of the West. For developing nations, a yuan-dominated world offers a host of opportunities. Freed from the constraints of the US dollar, countries in Africa, Latin America, and Asia would be able to negotiate trade deals on more favorable terms. They would no longer be subject to the whims of Western financial institutions, and sanctions, which have long been used as a tool of Western economic coercion, would lose their effectiveness. But it's not just about economic freedom. A yuan-dominated world would also bring political shifts. Nations that have long relied on the US for financial and military support would begin to look elsewhere. China, with its growing economic power and influence within BRICS, would be the obvious choice. As the yuan gains prominence, China's political clout would grow as well, creating a new set of global alliances that could challenge the West on multiple fronts. The US, meanwhile, would find itself increasingly isolated. Without the leverage provided by the dollar, the US would struggle to maintain its influence in global affairs. Military power might still be a factor, but as history has shown, economic power is the true driver of global dominance, and in a yuan-dominated world, that power would no longer reside in Washington. Now the question is, what will the West do in response to the yuan's rise, and can it adapt to the changing global order? The West, particularly the US, is not known for gracefully accepting changes to its dominance. For now, the US seems content to cling to outdated strategies, economic sanctions, trade restrictions, and military intervention, all under the illusion that the world still needs the dollar to function. But as more nations, particularly BRICS members, start to transact in Yuan and other local currencies, these old tools will become increasingly ineffective. The West can try to fight this shift, but fighting a rising tide rarely works. One option for the West is to double down on its current approach, escalating trade wars and imposing stricter sanctions on countries that move away from the dollar. However, this would likely backfire. Countries that feel cornered by Western economic aggression may align even more closely with China and BRICS, seeking refuge from a global system that is no longer stacked in their favor. In the end, such tactics would only hasten the decline of Western influence. Alternatively, the West could try to adapt to the new economic reality. Rather than fighting BRICS and the Yuan's rise, the US and its allies could seek to cooperate in this new multipolar world. That might mean accepting that the dollar will no longer be the global reserve currency, and that's a tough pill for the US to swallow. But if the West hopes to remain relevant in a world increasingly dominated by BRICS and China, adaptation is not just an option, it's a necessity. The US could invest in strengthening its domestic economy, focusing on innovation and competitiveness rather than relying on the dollar's supremacy. It could forge new, mutually beneficial trade relationships with BRICS nations, accepting the yuan as a viable currency for international transactions. This would require humility and foresight, two traits that have been notably absent in US foreign policy for decades. But if the West hopes to survive in a yuan-dominated world, it may have no other choice. Is it time for the US to face the hard truth? Can ignoring the decline of the dollar's dominance stop its fall? Let us know in the comments section. Do you think the US will one day be using the yuan as a trade currency? Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We have decided to bring videos on something nobody talks about: African politics, economy, and increasing power. Thanks for watching, and until the next video, stay tuned.
Tell us what you think in the comment section. Like and share the video, and subscribe so that you don't miss any of our African videos. It's the best way to support us.